to take advantage of double taxation relief, we make reference to our domestic law as well. So you remember that I told you there are two approaches. What are the two approaches for claiming reliefs? What are the two approaches for claiming reliefs? Or the two approaches to relieve people from double taxation? What are the two approaches? I said we can use what? Who can remember? Remember I told you that if you want to claim a relief, it could be unilateral, meaning we will focus and use the provisions in the domestic law, right? Or it may be bilateral, where we focus and use what? The DTAs. Are we okay? So using our domestic law, our Income Tax Act, it means you are trying to apply a unilateral relief. Whether or not there exists a DTA, we can still apply this relief, right? So in accordance with Section 112 of the Income Tax Act, where a resident of Ghana has paid a foreign tax on an income derived from a treaty partner of Ghana, or even if it's not a treaty partner, I get it. Section 112, as the case may be, allows for a credit relief against similar tax payable by that resident. So if it's a treaty partner, we apply this section and then what? The section in the DTA or the article in the DTA. If there's no DTA, then the person must provide what? Evidence of the tax paid from the foreign country, like foreign tax receipts and stuff like that, right? But then we are saying that Section 112 restricts the amount of tax credits, are you getting it, to the average Ghanaian tax rate. You remember that last week I was telling you that anytime you want to claim a double taxation relief, it must not exceed your country or the residence country's tax rate. Do you remember? We took some slight examples. Now, if you are liable to tax in a country with a higher rate than Ghana, will only be entitled to a partial relief of an amount that is equivalent to what? The amount that is derived using the Ghanaian tax rate on that particular income. You understand? So a taxpayer who is liable to tax in a country with a lower tax rate will be entitled to the full relief. So we said something that when it comes to tax credit, okay, a credit relief, I told you we can have a full, we can grant the person a full credit, or we can grant the person an ordinary credit, not so, an ordinary credit or a partial credit. Are we okay? So these are the ones that we have. So apart from this, the law allows us to relinquish a foreign tax credit. Now, relinquishment looks like the deduction method we know, right? And we said that instead of getting a credit against your tax, the foreign tax you went to pay can be claimed as a deduction against your income. You understood? Can be claimed as a deduction against your global income. So on the other hand, under Section 112, subsection 3 of Part 896, it allows a person to elect. You can elect that you don't want to take a credit, but the foreign tax that you pay, you relinquish it, right? By claiming it as a deduction against your income tax that you pay the foreign country, right? But otherwise, we do not allow any deduction for foreign taxes paid. Okay, this is the only case where you get a deduction for a foreign tax paid under relinquishment. Is that okay? Please, is everyone okay? Is everyone okay? So let's take a question on relinquishment. So Gani Limited is a company based in Ghana and has a business dealing mainly in Nigeria. So you can see this guy has a dealing in Nigeria. Nigeria, we do not have a DTA with Nigeria, right? See, we do not have a DTA with Nigeria, okay? But then in the 2020 year of assessment, the following data is relevant to parts of its operation. Now, the company has a global income, meaning worldwide income, right? This is the total that it has earned from its worldwide income. That's 25 million Ghana cedi. And it paid tax of what? 1 million in Nigeria, where the exchange rate was 67.59 naira to 1 Ghana cedi. And Gani has elected to relinquish the foreign tax credit for the year in line with section 112. So they said we should compute his tax payable. Okay. So how do we compute the tax payable? Since we are relinquishing, what do we do? How do we treat relinquishment? Yes. How do we treat relinquishment of foreign tax credit? How do we treat relinquishment? How is it done? Oh, please make it interactive. I don't like a silent class at all. It makes me tired.
We deduct the amount from the income tax to be paid.
Is it deducted from income or is deducted from tax?
It's treated as an allowable expense.
Yes.
So it's deducted from income.
It's deducted from income. That's it. So in that case, if we want to relinquish, that means what do we need to do? Why is this not? So in that case, you have to take his global income, right? The global income this guy had, which is how much? The 25 million also. And then we'll less allowable deductions from it, right? So that, pardon me, I've been writing the whole day, so my hand is shaking, just so tired. So we are going to now less the allowable deduction, which will include the tax paid in Nigeria, right? So the tax paid in Nigeria. So we are trying to relinquish the credit. So in that case, since the Ghana cedi is smaller in terms of number than the Naira, that means we need to get Ghana cedi, we must divide. So in that case, we are saying that this will be 1 million Naira divided by 67.59, right? And that gives us the tax paid in Nigeria, in Ghana cedi. How much will we get? You end up with 14,795.09, right? Is it correct? Is it correct? Is it correct? Nobody is talking. Okay. So you see, we allowed the tax as a deduction from his global or worldwide income. Then now we can tax this at the 25%. So up with 6,246,301.23. 23 is 8. This is understood. So with relinquishment is the same as the deduction method that we learned, right? Where the foreign tax is treated as a deduction against his income, right? This is okay. Are we okay with relinquishment? Are we okay with relinquishment? Hello.
Yes, we are.
Hello, sir.
Yes, please.
Please, can you kindly break down the relinquishments for me? What is he relinquishing now? Or is this just like the normal word as relinquishing or something?
It means you are killing the credit. That is it. You are not taking it as a credit, but you are rather relinquishing that tax by claiming it as a deduction. Do you understand? So to relinquish something means to take it off, right? So to kill, you are not getting a credit. So you are electing that, okay, though I do not want a credit, I want it to be treated as a deduction against my income. Are you okay?
Okay. All right. Thank you.
Okay.
But is there any rationale behind that?
Oh, we learned it last week.
Okay.
That is I told you to achieve
Deduction.
neutrality. Yeah, that is it. It's still the deduction method under our law, but we do not call it deduction method. We call it relinquishment.
Oh, okay. Okay. Thank you.
You're welcome. So this one, you can use it for tax planning. For instance, if you have so much credits, right? And you feel like, oh, me claiming a credit will not even have any effect because already I'm in credit with GRE. Then you would elect to rather relinquish, right? Do you get where I'm coming from? Let's say you have so much withholding tax.
Yes.
So why would you want to claim a credit again for foreign tax? You rather want to relinquish so that you can also reduce your expenses elsewhere. Do you understand?
Hello, sir.
Yeah, David, I can hear you.
Hello, sir.
David, I can hear you.
We learned that the deduction method leads to higher tax than the other method. So, if we are talking about relinquishment in today's regard, I've seen it some way.
Why are you seeing? Let's take an example. Let's use this same company. Let me show you something, right? So, company had global, let's say it has global income, right? Of how much? 25 million, not so. 25 million. Okay. Now we are not going to relinquish, but let's say you have tax paid, right? You have tax paid, the foreign tax paid, let's convert it to Ghana cedi, it was about 14,795.09, right? Then we have other taxes paid. Let's say that we have other taxes that were paid by this guy, which amounted to about, let's say 10 million. Okay. The other taxes that were paid amounted to 10 million. So look at something here. Now, if we decide to tax this one at 25%, tax it and let's see how much is it. What would be his tax liability? 25% of 25 million, that's how much?
$6,250.
It's 250,000.
Okay. Now we are going to less his withholding tax credits that he had already, which was amounting to how much? 10 million. Not so. This is in Ghana. This is not foreign. This is in Ghana. Now, see, this guy has too much credit against his income. So why should he go and take a foreign tax credit again? Do you understand? Do you get where I'm coming from?
Okay.
So this guy has a net credit already. So he has elected that, oh, this thing going into my credit will even give me more credit, right? So I'll rather set it off to reduce my income. Rather than reduce the tax itself, I'll use it to reduce my income so that the net effect will show in the tax liability, especially people who run different businesses or have different streams of income. They mostly prefer to relinquish the credit. David, are you okay now?
Yes, sir.
That's fine. So if you are claiming a foreign tax credit, you will be granted this credit upon submission to the Commissioner General of a tax credit certificate from the other country, or an official receipt or a functional equivalent of a tax credit certificate from the tax department of a foreign country. So it means that even if there's no DTA with Ghana, if you can provide a tax credit certificate or an official receipt or an equivalent of a tax credit certificate from the tax department or the competent authorities of the other country, then you get that deduction or you get that credit. Please, is that okay? Is everybody okay?
Yes.
No. They can ask you a question. Is it only with DTA that you can get a credit? Is it only with DTA that you can get a tax credit? Is it only with DTA that you can get a tax credit? Nobody's answering no. I said, is it with DTA that you can get a tax credit? Is it only with a DTA that you can get a tax credit? Yes or no? I'm trying to say, does Ghana have to have a DTA with the country you pay the tax at before?
No.
If no,
No,
why?
sir.
If no, why? If no, why? What did we learn?
No, I think what I remember is that tax credit can be given from both residents and, let's say, from source, whether or not the income was generated from the source or from the residents, or whether or not there's a DTA with the person. For instance, the example that you just give, the person's income was from Nigeria. Ghana do not have a DTA with Nigeria. However, our laws mandate us to maybe source the worldwide income of the person from, let's say, a global income. And therefore, whether or not we have DTA with the other country or not, the law mandates us to give her the credit. I don't know if I'm
person gives a proper tax
Oh,
credit
okay.
certificate or receipt,
Evidence.
which gives
Okay.
evidence that he has paid. So the whole thing is, so far as you're able to provide evidence, then they may, the word is may, right? May give you the credit. Please keep this because now when you are answering questions, your examiner now likes to examine from both the international and the Ghanaian perspective. Is that okay? That's why I'm teaching you these things. Now, let's deal with foreign tax credits in Ghana, right? So I'll give you a simple illustration, then we take a full question. So always there are some steps you need to follow. So let's say that this is AB, right? AB makes, so this is AB, he makes income of 500,000 cedis. Be writing, please, because I'll not give you time to write. In Ghana, right? In 2023 year of assessment. Okay, so this is AB. This is the income he makes in Ghana in 2023 year of assessment. Apart from that, he earns, are you getting it? Business income. Okay, AB earns business income. That is 200,000 pounds in, let's just make it 20,000 pounds in the UK, right? In that same year, where net of 10% tax, okay? So this 220,000 was net of 10% tax. Then we have the exchange rate, okay? Exchange rate being 15 cedis to £1, right? So that is it. And they are asking you to, one, determine the amount of foreign tax credits to be claimed, and II, tax payable for this guy, right? So very simple question. Now, the whole thing is that before you can claim a credit under a Ghanaian tax law, right? What you need to do is that you need to follow some steps. Always try to find the average rate of tax, the average tax rate in the foreign country. Come and get the average tax rate in Ghana, okay? Compare the two. And with what we learned in class, we know that where the Ghanaian rate is higher, we can give you a full credit. But when the foreign rate is higher, we can give you a partial credit. Do you remember? Have you finished writing the question? Have you finished writing the question?
Yes. Yes.
So the first thing we have to do is to find, okay, the first thing we have to do is to find our average rate, average tax rate in the foreign country. So average tax rate in the UK, right? And our average tax rate is always giving us our tax paid, our foreign tax paid, over our gross foreign income, right? So our gross foreign income times 100. So there's one thing I want us to look at. Now, the income we're dealing with in the foreign country, was it not business income? And with what we were giving, was it gross or it was net? The foreign income, was it gross or it was net?
Net.
It was net, meaning we need to gross it up, right? So first of all, this is what I want you to do. Let's find our gross foreign income. Gross foreign income. How much would it be? We are saying that they took tax of 10%, right? So if they took tax of 10%, that means whatever we have as net is equivalent to what percentage? If originally
90%.
and you've taken 10,
90%.
the net is equivalent to 90, right? But we want the 100. So that means if 90 gave us 20,000, right? 100 will give us what? To give us more, right? So if more, let's divide.
Yes.
So that means 100 out of 90 times the 20,000 pounds should give us the gross foreign income that we want. Not so? And how much becomes the gross foreign income?
22,222.
So 22,222. Okay. Now that we have this, they took tax of 10%, right? Do you remember? And that's 2,222. Is that not so? That's what gave us the net that we saw. Not so? That's what gave us this net income of the 20,000. Okay. Nice. So what is the average tax rate in the UK? Let's get it. Average tax rate in UK will be what? That's our tax paid. That's 2,222, right? Divided by the income of 22,222, right? Is that not so?
10%.
Yeah. 22,222. Now times 100. If we put it together, we end up with 10%, right? Which is the
Yes.
tax which was paid in the foreign country. So you see, always gross up. I intentionally made a question like this. Most questions, yeah. But this one, you have to gross it up. So you see, we grossed it up, got the tax, and it's 10%, right? The next thing is to find what? The average tax rate in Ghana, not so. So you calculate average tax rate in both countries. So average tax rate in Ghana, what you have to do is take what? The tax payable, because you are yet to pay tax in Ghana, right? Over your chargeable income. Okay? Over your chargeable income times 100. So first of all, we need to determine what his chargeable income. And his chargeable income, remember, we learned that chargeable income includes your accessible income from all sources, irrespective of whether the source are seized. Do you remember? So let's determine his chargeable income. So determination of chargeable income for AB, right? That's where we need to go first. So we get his chargeable income for the 2023 year of assessment, right? So let's get this, okay? So in that case, first of all, what was his domestic income? His accessible income from Ghana. How much was his accessible income from Ghana? How much did he earn from Ghana?
500.
He earned 500,000, okay, nice. And how much was his accessible income, accessible foreign income? The gross, so I told you always foreign income, we bring the gross. What's this assessable foreign income?
22,222.
So 22,222 pounds, right? But the exchange rate was 15 cedis. No, be so. So when we convert to Ghana cedis, how much would that be? Did we get 333,333?
Yes.
833,333, right? Becomes his total assessable income, right? From local and foreign source. Now, were there any allowable deductions against his income? They didn't say anything, right? Whether he contributes to SNAIT or he's working in a business that gave him capital allowance. There were no what? Deductions. So we still end up with chargeable income of 833,333, right? Which becomes chargeable income. So we've got his chargeable income now. And now we need to compute his tax payable. Okay. And for individuals, the tax payable, we use the graduated rate. Okay. And in exam, they'll definitely give you the graduated rate or they'll give you a rate to use. I'm going to give you a dummy graduated rate to use. So this is the tax rate we are going to use. You need to know how to use the tax rate in Ghana because most of your questions, you will get it, right? So I'm showing you how to use the tax rate. So let's say that we have the income band, the income band or the tax band, the income, the rates, and then the tax, right? Which particular year that you are computing. Let me look for 2023 rates. I'm actually looking for the rates for us to use that. Find it. I always skip it to these are the rates. Okay, so 2023, look at the rates. So it says what? The first, can you see the rates? Can you all see? Can you all see the rates? That's how we use the graduated rates. Can you all see?
Yes.
So in that case, we are going to, how much was his chargeable income? 833,333, right? Okay. So we take the first 4,824 from it, right? It's like you are taking from this income and then you are taxing it at free. Free means there's no tax on it, it's nil. Then we take the next 1,320 from it, right? And then we tax it at 5%. That'll give us tax of how much? That'll give us tax of how much? Get tax of 66 cedis, right? And we take
Yes.
we take the next 1,560 from here. Can we deduct? Yes, we can, right? 10% gives us what? This was 66. This
156.
156. Then we take the next 36,000. Can we deduct it? Yes, we can.
Yes, please.
Okay. 17.5%. Right?
6,300.
We get 6,300, right? Then we take the next 196,740. Can we deduct? Yes, we can, right? 196,740. We can still deduct from the 833. That one will tax it at 25%. That gives us what?
49,185.
49. 1. Okay. Then the next 359,556 will be taxed at 30%. We can still tax it. We can still take it out.
107,866.
107,866. Okay. Then the excess. The excess is any when you add all this up, all these ones add up to 600,000, right? So when we say excess, it means that we are comparing it to the 600,000. So what's the excess? The excess amount.
233,333.
That means the excess amount, which is 233,333. I get it, because when I add everything up, it should still give me the 833,333, right? So if all of them amount to 600,000, the excess is about what? 233,333, and that will be taxed at 35%, and that gives us how much?
81,000.
Is that how much?
81,666.
81666. Okay, so what's our total tax payable?
$245,000. 245,000. 239.
So now we've got our tax payable. Please, was everybody comfortable with the graduated rates? Are we all okay with how we generate a tax using the graduated rates? Are we all okay with the graduated rate? Hello?
Yes, please.
So now that
Yes.
we've got it, what do we need now? We need the average tax rate in Ghana, true or false?
True.
And how do we get the average tax rate in Ghana? We learned that the average tax rate in Ghana is what?
The tax divided by chargeable income.
Tax payable over chargeable income times. So in that case, our tax payable, we know this is 245,239, right? And chargeable income was 833,333. Okay, we multiply by 100. What then do we get?
29.43.
We get 29.43%, right? Okay, so this is the average tax rate in Ghana. So if we are looking at the average tax rate, right? Look at Ghana. Ghana was what? 29.43, not so?
Yes, please.
UK was what? 10%.
10%.
Okay. So it seems Ghana is what? Greater than UK. So what kind of credit can we give? Is it not full credit?
Yes, full credit.
Can give full. So if we can give full credit, it means that the total tax liability of this guy becomes what? Total tax liability.
2222.
Total tax liability. That would be his tax payable, also, which we had as two. What was his tax that he's supposed to pay? 245, 239.
245.
Okay, this guy has
It's 222.
245, 239, right? That's the tax.
Minus.
Yes, then we now less the foreign tax credit from it, right? So the foreign tax credit, tax that he paid, we can take a credit for it. So it was, he paid tax of 22222, but the pound is what? 15 cedis, right? So how much do we?
33,330.
33,330. Okay, so we can claim all, and this gives us our net tax liability for this guy. 239 minus 33,330. 211,909, right?
Yes, please.
So that is it. This is how we compute foreign tax credits under our Ghanaian tax law, right? If you have 3 incomes, for each separate income, you calculate its own average tax rate. Is that okay? I hope it wasn't difficult. We'll take more questions. There are so many questions I have for you, right? Are you okay with this question, or you want to write, or we should move? Can we move? Can we move? Nobody's saying it. Can we move?
Yes,
Yes.
we can move.
Obi, please, you can move so that maybe later on you send us a copy. But if you want to copy, I think it's delaying.
I can send you the Excel sheet if you like.
All right, please. All right. Thank you.
Let's take snapshot as well.
We are, but sometimes we are concentrating, and as soon as you are done understanding, you want to take pay, then it scrolls up. So maybe we can do that later.
So let's look at Kweku Osio. Kweku Osio has been in employment since 2018, right? On a consolidated salary of 36,000 per annum with Dachi Timbers Limited. Now, in the year 2019, his consolidated salary was 150,000 for the year, okay? With the following allowances, from which he contributed 5.5% to the Social Security and National Insurance Trust. He is also entitled to the following allowances and benefits. So they gave him entertainment, which is 15% of his basic salary. He has risk allowance, which is also 20% of his basic. And then he's given accommodation on a timber site. In the same year, he remitted an amount in CD terms of his UK pound sterling, being his net share, the word is net share of his partnership profits in UK into Ghana after tax of 45,000 had been deducted. So the amount he brought wasn't net or it was gross?
Net.
Net. So what do we need to do? We need to gross it up.
You need to find the gross.
So Kweku Osio is married with 3 children, 2 of whom are in Christ the King Junior High School in Accra and 1 in Konongo Dumase Senior High School. He paid taxes of 5.6 during the 2019 year of assessment. So they said we should determine his tax liability for 2019 and also what is his net tax liability. So first of all, what is the first thing we need to do?
We need to find average tax rate in UK.
So find average tax rate in UK, right? Regarding what income? Regarding what? The partnership income.
Partnership profit.
Partnership profit, okay? So in that case, for partnership profit, how much tax did he pay? He paid the equivalent
45,000.
5,000, not so. And what is the gross income?
180 plus 45,000.
So this will become tax paid over the gross times 100. So you all follow. So 45,000 over what becomes the total income? That's 45 plus the 180.
Plus 180.
That means this is 45 over how much?
225,000.
And that gives us how much? Average tax rate of how much?
20%.
The average tax rate in the UK for partnership profit is 20%. Let's see if we're entitled to a full credit, right? So in that case, now that we have this, what's the next thing to do?
We need to calculate average tax rate in Ghana.
Average tax rate in Ghana. and that is giving us a tax payable over our chargeable income times 100. First, we need to determine its chargeable income, right? So,
Yes, please.
what's the name of the guy? Kweku. Your computation of chargeable income for the 2019 year of assessment. Basis period from 1st of the 1st, 2019 down to 31st of the 2019. So just lay down our foundation, okay? So I think he had income from employment, right? No,
Yes, please. It be so.
income from employment. So income from employment,
36,000.
he had basic salary. No, look at it carefully. 36 was as at 2018. But in 2019,
Yeah.
salary was consolidated to be 150,000.
150,000.
He has basic
Okay.
salary of 1,000. And then we are going to add cash benefits that he received. There were some cash benefits. Did you receive any cash benefits? What other benefits did
Yeah.
you?
Yes, entertainment.
Okay, they said he
Entertainment 15%.
gets entertainment. That's 15% of the 150,000. That gives us how much?
22,500.
22,500. Then he had risk, right? Risk,
Yes, please.
risk was what? 20% of his basic. That's 30,000. So we added to get 52,500. Okay. Now he was given accommodation, which is a benefit. But anytime you have in Ghana, anytime you have accommodation on a farm or a timber site, a construction site, it's exempt from tax. Do you get it? That is why this one will not include it. So in that case, when we add this, what are we going to get? 150,000 plus 52,500. That is 202,500, right? And this becomes his assessable income from employment, right? Do you all follow? Do we all follow?
Yes.
So now we are going to add his accessible foreign income, not so. Accessible foreign income. So accessible foreign income, we add what? Share of partnership profit, right? And this one, is it gross or net that we need?
Gross.
Gross. And the gross, we had it to be what? 2 to 5,000. Do you remember?
Yes, please.
Because you receive net of 180,000. And then you add back the tax. So that is 225. We add it together. 427. Right? Which becomes our total accessible income. Okay. So total accessible income, less reliefs. Did he have any reliefs? Yes, he did, right? They said
Yes, please.
contributes to social security. So social security fund, he contributes 5.5% of his basic salary, which was 150,000 to social security. 0.255 by 150,000. So he has 8,250. Then they said he's married and he gets marriage relief. And as at 2019, marriage relief was 200 cedis. If you are married, independent spouse. Then he has child education, which is 200 per child to a maximum of 3 children, giving us 600. Okay. That was all, right? There was nothing else that he got. So these are the only deductions he's entitled to. So that should give us 8,000. No, it should be 9,000 and something. 1,000. So these are all the deductions he's going to get. So you take his 427,500 and minus the 9050 from it. You end up with 418,450, right? Which now becomes a chargeable what?
Income.
Income. Okay, so now what do we need to do? We need to get his tax payable, right?
Yes, please.
By putting it in the graduated rate. So we need 2019 graduated rate, right? Get his tax payable. So let's go back to our payee. What is our payee schedule? 2019. Okay, 2019 annual rate, we can see it from here. So we have income, rates, and then what? Tax. What was his total income? His income was 418,450, right? Okay. Then we take the first, how much? We take the first 3, 4, 5, 6 from it. The rate is free, it's tax free, it's nil, right? We take the next 1,002 out of this money. Then we tax it at 5%, and that gives us how much? Is this 60? We take
60.
1,680, tax it at 10%, you get 168. We take the next 36,000, tax it at 17.5. What do we get?
6,300.
6,300. That's all. We take the next. Can we take 197,664 from this?
Yes, please.
Tax it at 25%.
49,415.
How much do we get?
49,416.
49,416.
Yes.
49,416.
Yes, please.
Okay. 49416, eh?
Yes, please.
416. Okay. So is that all? Or
Remember,
we still take the 240?
remember,
All this, the sum of all this will be 240, right? The total will be 240. You can see. So the total will be 240. So 240, we have to compare to the 418, and the difference is the excess. So what's the excess?
178,450.
178,450. Okay, so this one we can tax it at 30%, right?
Yes, please.
Okay. So tax it at 30%, what do you get?
53.
535. 535, like this.
Yes, please.
Okay, so when we add all, what do we get? When we add all, what do we get?
Hold on.
Okay.
You get 109.
109.
479.
479. Okay. So now this is the total tax liability, right? The total tax payable by this guy. Okay. Now that we've got his tax payable, we can now get what? ATR in Ghana, right? Average tax.
Yes, please.
Okay. That is our tax payable over our chargeable income times 100. So we know this is 109,479. Not so. Over chargeable income was 418,450. 418,450 times 100. So what do we get?
26.
26%. Okay. So ATR
0.16.
6 point. 26.16%. Okay. So ATR in Ghana is 26.16, and ATR in the foreign country was what?
20%.
So this is greater than this, right? So hence
Yes, please.
we
Full
grant
credit.
full credit. Yeah. We grant full credit. So let's get to tax liability now. Tax liability. So
109.
okay, so his tax on chargeable income was 109,479, right?
Yes, please.
109,479. Then we less
45,000.
tax credits from. So tax credits, we have two. We have the foreign tax credit, right?
Yes, please.
Foreign tax credits, which was the 45,000. Then we have the taxes paid. In the question, they told us that he paid some taxes of 5,600.
Mm.
Add all the two together. So we add all the two together. Okay. We add all the two together. So what do we get then?
58,879.
No, I mean when you add the two, this one is
50,600.
50,600. Okay, so deduct it.
You get 58,879.
Five eight.
879.
Are we all okay? Simple as ABC.
Yes, please.
Okay. It gets complex and complex as we go down. Let's try this one if you can do it. This one is complex than what we did. This one, they've already taken out his taxes. So how do we approach it? Andrew Sowia recently relocated to Ghana to commence his business after retirement from Tax Force UK Limited, a security company which he served for over 25 years. You can see. The nature of his business was to provide private security to diplomats and the very affluent. Before coming to Ghana, he rented out his apartment in the UK for a yearly rent of £18,000. And he also maintained a healthy balance in his account with Diamond Bank in London. His income for the 2019 year of assessment is summarized as follows. So he has business income, which is net of all taxes. Net of all taxes means they've already done chargeable income and they've taken the tax out of it, right? The payee out of it. So you have to gross it to get the income. And this thing is not taught in class. You have to use some Kululu way to get it. I'll teach you a simple way to get it. And then he received dividend from Faithful Limited, which is a resident company, at a gross amount of 18,000. Okay, which means it's in Ghana, but he received rent of 16,200, which was paid into his account with Diamond Bank in the UK. And then they withheld tax of £1,800. And Diamond Bank also credited his account net of 81 bank interest, 10%, right? Meaning that the amount received is equivalent to what? 90%. And they said the exchange rate is 7.5 to £1. And Andrew Sowia does not contribute to Social Security in Ghana. Compute his tax liability as an individual for the relevant year of assessment while granting him relief from double taxation under the Ghana-UK DTA. So you see, this time they are referring to the DTA, right? Okay, so what then do we do? We must get his gross income. Remember that I told you that anytime you want to account for tax, you must get gross income, right? But first of all, what is the first thing we need to do? We need to get the average tax rates where?
Yes.
In UK, right? And average tax
Yes,
rate as what? Tax paid over the gross what? The gross foreign income, not so? Times 100. Okay, now the gross foreign income we have is different. So first, the first income we had was what? What incomes did he receive? What income
Rent.
did he receive? He received rent, right? So rent.
Yes, please.
He received rent of what?
16,200.
Yes, but tax of 1/8 was taken, right? So the gross
Yes,
rent
please.
would be 18,000 pounds, right?
Yes, please.
And then he paid 1/8 tax times 100. That means rent average tax rate was 10%, not so. Then 2, interest. How much interest was? Interest, we need a gross. So we need to gross the income up. So 100 out of 90 times what? 81, right? Do you all agree?
9,000.
You all agree? It's 100 out of 90. Because they took interest of 10%. No be so. So
So,
instead of that would have been 900, right? So 900 out of the 9,000 times 100. That one was also 10%. It's just a coincidence. But anytime you have multiple incomes, you have to what? You have to gross all of them up, right? And get the average tax rate. Now we've got average tax rate in the UK. Now we need average tax rate in Ghana. No be so? Those were the
yes,
only
please.
so we need average tax rate in Ghana. So average tax rate in Ghana. So average tax rate in Ghana, we need our tax payable, not so. We need our tax payable over what?
Chargeable income.
Over our chargeable income. Times 100. Okay, so first of all, we need a gross income, right? The gross business income, but the business income was net of all taxes. So in that case, you see the business income we had was actually what?
Net.
Net, right? It was net. And how much was it? It was 126,000. No be so. Okay. Now this one, you can still put it in the graduated rate. Okay. Again, but when you finish, remember that because it was net of taxes, wherever it will fall, you have to gross it up.
Okay.
Let's see. So using the rates, they've given us rate to use, right? 3828.
Yes.
So let's see. Let's insert it into the graduated rate. So we compute the tax on the net business income, because you know that the tax is the excess that we always need to get, right? Everything falls within, it's just the excess. So in that case, insert into the graduated rate. So let's insert into the graduated rate. So in that case, income rate tax. So the net income was how much? 126,000, right? Okay, so we take the first 3828, right? And then it's
Yes, please.
free. Okay, then we take the next, how much?
1,002.
1,002. That's at 10%, giving us 120, not so. Then we take the next 1440, right? We tax it at how much? 10%.
10%. The first one is 5.
Should have been,
Which is 60.
yeah, it should have been 60. Have been 60. So that gives us a 144.
Yes.
Okay. And then the next one, can we still deduct?
Yes.
The 36,000 we can deduct. 36,000 will fall in 17.5. How much would that be?
6,300.
6,300. The next one there, it cannot fall with
We
it.
can.
So we need the excess. That means if we add all, where does it fall? When we add all this, where does it? So we get the excess. What's the sum total of all this? Add.
It will give us 42,000.
42,000 and subtract it from the 126. Subtract it
It's
from
not 42. There are other this. Let me finish mentioning.
okay.
42468.
You mean that this one is 42468?
Yes, please.
42468. Okay. So what's the excess?
83
83
532.
532. This will be taxed at 25%, right?
Yes, please.
And that gives us
20
20
883.
883 point.
Oh, it's a round figure.
So okay, so now we add all. Now you see, this is the trick. If it ends on 25 and this is net, it means that 75 of the, you see what I mean? If this is 25%, it means that the whole income that should have been existed is graduated on 75%. Do you understand? So we are saying that if I'm doing 25% tax, it means the income is equivalent to 75% because 100% is the original income. Do you understand?
Yes, please.
So if it ended on 17.5, it means the other end of the income would have been what? Just subtracted from 100.
82.5.
That is how we gross up. Do you understand? So add
Okay.
all this up. So when we finish, we gross the tax up because it ended on 25, meaning that it was on 75% income. So add it up. So that's how we work back. This thing is not taught in class. So I'm teaching. So what do we get?
We are adding the taxes.
Yeah, all the taxes.
That will give us 27. 27387. 837.
837.
Oh, 27387.
Was even confused. Point.
It's 27387.00.
Okay. So this is the tax payable, right? But you are saying that if this 27387 was equivalent to a round of 75%, right? Because you want to get the original tax, which is 100%. 100% will be more. So if more, let's divide, right? So in that case, it means that the actual tax, the 100% tax which would have been paid on this income is equivalent to 100 out of 75 times 27387. And that means what's the original tax that we'll get?
36.
You said we get what? 36.
516.
36, 516.
Mm.
Round figure.
Yes, please.
Okay. So it means that now our gross income, see, if we want to get our gross income is the 126,000 that we had plus the tax, right? So it's always the net plus the tax that was paid. And the tax is 36,516. You add it to what do you get?
162.
162.
516.
516. If you like, let's put it in the schedule and let's see if truly we'll end up with 36,516. Let's put it in the schedule again. Test.
Let's go.
Start. Let's see if it is true. Okay, so we'll start with first how much? First 3828, right? It was free.
Yes.
Okay, so nil. So income, rate, and then tax. So the next,
1,002.
the next 1,002, the tax was what?
60.
5%, giving us 60. Okay. The next
144.
10%. Give us what?
144.
Cut down this.
36,000. The net.
The next was what?
36,000.
So the next, how much?
36,000.
17.5, right?
6,300.
6,300. Okay. Okay.
Remainder.
The remaining will be what? Because we are comparing it to a total income of 162,516, right? So what's the so when you add all this up, what do you get?
You get 42.
42.
126,516.
426.
It's 42468.
Okay, so 42468, right? Compared to
Yes.
16516. What's the excess?
120. 048.
048. Now this one will be taxed at 25. What do you get?
Yes. 30.
30.
012.
012. Now add everything up and see what your tax liability will be.
36,516. Correct.
So I've taught you a new trick. Didn't it work?
Yes, please. Yes, please.
Finally, there's another long, complex way people use, and you never
You
have to test and test and test and test and test until you get. That's what everybody is. Everybody does, even in practice. But there's a shortcut. There's a marginal rate approach. Straightforward, right?
Yes, please.
So now we've got the gross income. You see, the gross income alone has taken all our time.
Mm.
So I'm giving you different variations of how the question can come. So in that case,
That means
you said that means,
more mark.
yeah. So determination of what? Chargeable income, not so. So
Yes.
let's get our chargeable income now. So determination of our chargeable income. So we start with our gross business income, right? So all income must be grossed up. So gross business income. So what's our business income now? The one we grossed up plus the tax. It was 162,516, right? 162,516. Then we had other incomes coming in apart from the business income. Dividend we cannot
Yes,
add because dividend is a final tax. I'll come and teach you withholding taxes when we get to DTA withholding rates. But anytime you see something like dividend, this one was in Ghana. It's not, if it was foreign dividend, we will add. But this one is it's local, right? Local dividend is a final tax. It means that it cannot be added to your income. Okay, it will be taxed separately. So we will not include it. Are we okay? But apart from our gross business income, we are going to add our accessible foreign income also. So accessible foreign income. Accessible foreign income. What income and what income did we receive? We received rent, right? We need a gross rent. How much was the gross rent? How much gross rent? 18,000 pounds, right? And the pounds was how much? 7 cedi 50 pesos. True or false?
true.
True. Okay, so we have 18,000 going by 7.5. That means we have rent income of 135.
130.
Then we had interest received. Do you remember the interest received from the bank? And we know that the
Yes, please.
interest was also 9,000. Do you remember? Was
Yes,
9,000
please.
that we computed. That's 7.5. And that gives us what?
67,500.
67,500. Okay, so these were the only accessible income from the foreign countries. So let's add them together. 135,000 plus 67,500. That's 202.
Sir,
Yes, please.
you were saying the dividend will not be added.
Yeah. It's
But the dividend is gross, so the one given to us.
Yeah, it's gross, but it's still a final withholding payment. So you have two options.
Oh,
If you see it gross, you can decide to add it to your income and take a credit for it. Or you can go and still tax it separately.
okay.
You get it? You have two options. I hope that's okay. The law allows you to.
Yes, please.
You just have to get a tax credit from the person. Okay. So this gives us our total accessible income. How much would that be? So we have 162,516 plus 202,500.
365,000. 016.
So was there any relief? Did he have any relief like Social Security, any other thing? No, he didn't have any, right? So there were no reliefs for this guy. So nil. That means his chargeable income is still what?
365.
365,016. So now that we've seen this, let's get his tax payable. We have the rates there already, right? And the income he has
Yes.
exceeds 240,000. And we already have all the taxes here. Up to the 24. No, it wasn't
240,000.
up to 240. Okay. So let's
No, it's not up.
okay. So let's get the taxes. So we have income. Oh, why is this thing? Okay. Income, rate, and then tax. This question will take all your time. We have the first 3828, also 3, giving us nil. Then we have the next 1,200, 5%. He said that'll give us 60. Then we have the next 1440 at 10%, giving us 144. Then you have the next one, 36,000, also at 17.5. That gave us how much?
6,300.
6,300. Then you have the next 197.5
19
at 25%. That gives us how much?
49383.
49383. Okay. Then all this sum up to 240,000. Okay, we compare it to the 356,016. So total income is 365,016. That means the excess is how much?
125016.
125,016. This will be taxed at 30%. This is
37504.8.
3,70504.
504.
Okay, so what's this total tax payable?
That is 93. Hello, 93391.8.
That's it. Okay. So now we need ATR in Ghana and also every tax rate in Ghana. And now we need what? Our tax over our chargeable income, also times 100. So let's see. This 93,391.80 divided by our chargeable income of 365,016 by 100. Okay, so
25.59.
25.59%. In that case, it seems to grant full credit, right? Because when we compare the ATR in UK and ATR in Ghana, and then the type of credit we can give them. When it comes to the rent, right? ATR in UK was 10%. ATR in Ghana is 6.59. We can grant full credits also.
Yes, please.
Because this one is less than this. When we come to the interest too, it was the same. It was also 10%, while ATR in Ghana is still 25.59%. Okay, we still can grant full credit. Okay, so in that case, let's get his tax ability. So we have tax on chargeable income. What was his tax on chargeable income? It was 93,391.8. No, so
Yes, please.
then we less tax credits. No, so tax credits. His business income was net of tax. So we say what? Tax paid on business income, right? The tax paid on income can be claimed as a credit. And how much tax was paid on business income? We computed it as somewhere 36,516. Yeah. So we can claim the 36,516, and also we can less what? Foreign tax credit, also.
Yes, please.
Okay. So in that case, we had rent tax that was paid in the foreign country. It was 10%, right? They took tax of 1,800 pounds, and the rate was
7.5.
Okay, so we can claim all. Then we have
13,500.
that gives us what?
13,500.
5. Then we had what? Interest tax. And interest today took 900 pounds out of 9,000. So this also by 7 cedi 50 pesos.
6,750.
6750. Okay, so we add all our tax credits. That's 36,516 plus 13,500 plus 6750. And that gives us
5666.
766, right? Okay, we deduct all and then we end up with our net tax liability.
36.
1.8 minus 56,766. That gives us 3,625.
625.8.
So I think by now you all agree that we have looked at all the different variations of foreign tax credit, one which was single income, one which was multiple income, one which you have to gross income up, right? So you're exposed to all the different kinds, and that's the kind nowadays they'll be bringing to your exam. Who has any question? Or you still want us to solve more? Maybe a day for you. Or we can proceed.
Is there any other variation?
It could come in any form. As for that one, there it could always come.
Bill,
Yes, please.
at this point, can't we add the tax paid on the dividend to get the total
Oh
tax
yes,
liability the person paid?
add it. We have to add it, but since that one is a final tax, you say other taxes, right? That's how you head it. Other taxes. Then you say what? Tax, withholding tax on dividend, right?
Okay.
Take the 8% on the how much was the gross dividend?
Um,
18,000. So that one was how much?
Yeah.
8 by 8. Is it 1440? Is it correct?
Correct.
So we are on point. Would you rather we solve this or we should move? Are you okay with foreign tax credits? I want everybody to be okay. As for me, I have millions of questions. So we did. Today, the whole theme of our session is all about foreign tax credits. That's all we are learning. So we can keep solving or we can move to another topic. Should we solve this one? This one looks a little cumbersome.
Yes.
Okay. So let's solve. So it says Diana is a resident in Ghana for tax purposes and works as the managing director of Minex Finance Limited. She earned a basic salary of 360,000 for the year 2020. And she also received consultancy fees from a consultancy business of 750,000 during the year. Okay, so it's like she has business income, she has employment income. She contributes 5.5% of her salary to Social Security Fund. And in 2020, an investment income accrued to her amounting to £4,000 from the UK, for which she was charged tax of 800, from which she was charged tax of £800 in the UK. Do you understand? Out of the remaining 3,200, she kept 50% with her bankers in the UK, and the rest remitted to her in Ghana. She also received rent income of £1,000 after a tax of £200 was deducted. Interest on savings of £800 with a tax of £30 paid. All foreign income were received in 2020. She's married with one dependent relation and 3 children schooling at Christ the King Junior High School. Exchange rate is 10 cedi to $1. Compute the foreign tax credit relief, if any, and her tax payable. So what is the first step? Now the question, I've thrown it to you. Me, I've done my, what's the first step? You say I do.
You need to cut.
If you stock Then I implement. Now I'm not going to. So you tell me what to do. Now I'm your hand. You say, then I do. First step. Yes, first step. I'm listening. Nobody's saying anything. Oh, we've gone through the steps are always the same. What's the first step? Always average tax rate in foreign country. Or 2, average tax rate in Ghana.
Yes.
Compare the two. Get your tax liability. As simple as ABCD. So what's the first step? I just repeated it right now. What's the first step? Determine
Average tax rate.
Average tax rate.
ATR
Average tax rate in foreign country.
UK, which is giving us the tax paid, right? Over what? Over the gross
Charge-
foreign income, right?
Foreign income.
Times 100, okay? So in that case, how many foreign income did we have in this case? Let's see. Foreign income. Investment income accrued to her amounted to 4,000, which was charged tax of 800 in the UK. They didn't say it was net, so be careful, right? So we had investment income. She received what? 4,000, right? And she was charged tax of what? 800. Not so. They didn't say it was net. So you see, I didn't gross anything up. So you have to be careful. Sometimes students mistakenly treat gross income as net and gross it up again. So 800 out of 4,000 is how much? 20%, right? So that was the first income. What was the second income Dinah received? Out of the remainder 3,200, she kept 50% with her bankers in the UK and the rest remitted to her in Ghana. Okay. She also received rent income of 1,000 after tax of 200 was deducted, right? So rent income of how much?
1,000.
After tax of 200 was deducted. So the 1,000 is in net or is gross? Check well.
Net.
Net, because they said he received 1,000 after the tax has already been deducted, right? So that means the gross income should have been what? 1,000 what? 1,002, not, and then a tax of what? 200 had been deducted. So in that case, what becomes the average tax rate for the rent income? I had 16, is it correct? 16.67%. You get the same?
Right.
Correct? Then 3.
Correct.
She also
Right.
had interest on savings, right? Interest on savings in UK, where a tax of 30 was paid on her savings, right? So she paid tax of £30 on her savings of what? £800, right? And what's the tax? Is it 3.75%?
3.75.
3.75%. Done. So now we need to determine what?
ATR in Ghana.
Determination of ATR in Ghana. So determination of chargeable income, right? So let's just go and get her chargeable income for 2020 of that means we'll need 2020 rates. So we had employment income, right? Income from employment. How much was employment income? 360,000 also.
Yes, please.
gross consultancy income. Okay, we add her consultancy. Now the consultancy income was net. Remember, consultancy fees net. Consultancy is a service, and we told him tax on services in Ghana is 7.5%. You get it? It's 7.5%. So if 7.5 has been taken from 100, the original, how much is left? Is it not 92.5?
Yes, please.
So that means if we need to gross this consultancy income up, we need to take 100 out of the original 92.5 we have now times the consultancy income of 750,000 also to gross it up. So what do we get then? 100 out of 9.5 plus
810,000.
so we have 810,810.81.
81.
Okay, so this becomes accessible income from business and employment, right? Okay. Then we add
1170.
1170
70. 810.81.
10.81. Okay, so add our foreign accessible income, right?
Yes, please.
Foreign accessible income. We had what? We had
Investment.
investment income. Okay, so investment income, how much?
4,000
Yeah, so
pounds, but we need to count it.
but the exchange rate was 10 cedis. So that gives,
So 40.
then we had the rent. Rent was 1,000, right? So 1,002. No, so gross rent was 1,002 pounds and at 10, right? That gives us 12,000.
Yep. 12,000.
Then we had the interest savings, right? The interest was how much?
600 times 10.
800 pounds at 10, right? That gives us what?
Yes.
8,000 also.
8,000.
If we put all together, what do we get? We get 60K. Also. So we add up. That gives us our total accessible income for this lady.
123.
123.
30.
How much?
1,230,000.
1,238,100.
810.81.
That's fine. Now, did he have any reliefs? Did she have any reliefs? Yes, she did.
Yes.
She contributed to Social Security. So 5.5%
She's smart.
of her original 360,000 also.
Yeah.
19,800.
19,800. Okay. Then she's married.
Married.
As at 2020, marriage is now 1,002, not 200 again. Okay.
Then dependent.
Aged dependents. Before it was 100 per dependent. Now it's 1,000 per dependent.
Child education.
By one. That's 1,000 cities. Child education. How many children did she have?
3.
3. All attending recognized schools. So 600 per child by 3 children. That is 100. These were all the relief she enjoyed, right? So
yes, please.
Add everything up. 19,800 plus 1,200 plus 1,000 plus 1,000.
23,800.
23. 23. So we take this out of 1,230, 810.81. Have
207. 010.81.
So now we need an average tax rate in Ghana. So average tax rate in Ghana, and we know average tax rate in Ghana is giving us what? Tax payable
We
over.
need to compute
You said we need to compute what?
the tax using the
Compute it. I'm just putting the formula down. Now, tax payable. 2020 graduated rate. No, so. So,
mm,
we need to go back to our payee rates and go and check 2020. Where is it? I'm going to new app. Can't find it. Hmm. 2020. So this, oh, so the rate we're using was already 2020. We should have just gone up. The 3828. The one we just used for the other question, income rate and tax. There's a reason why I keep computing that. I have a shortcut, but I don't want you to, I just want you to get conversant with this rate because this time you are going to get something like this. That's why I keep doing more and more and more and more questions so that you just get used to, right? International tax is no more just theory. I just going to do some computations. So the first 3828 is free, nil. The next 200 is 5%. You said that was 60, right? The next 1440 was at 10%, giving us 144. The next 36,000, 17.5. You said that gives you what? 6,300. The next 197. The income would it be up to? Yeah,
yes,
up to 1 million. 197,532, right?
25,
25%. That gives us what?
49383,
149,333.
383.
Then the excess above all this is 240. So the excess above that. So this is 240,000 compared to the 1,207,010, right? 1,207,010. Without chargeable.
967
96
010.81.
plus 30%. Excess
290,000
290
103.24.
103.24, correct? Like this.
Yes.
Mm. 345 9.
990.24.
Okay. So now that we have this, we can easily get our average tax rate in Ghana, right? So this will be our 345 990.24 over 1,207,010.81 times 100.
$28.67.
So let's bring our ATR, the UK, ATR from average tax rate in the UK, average tax rate in Ghana, and then the type of credit. Okay, so we had what?
Investment income.
The investment income, the rate was what, 20%, not so. And in Ghana, 6.7. We still
Full credit.
we moved to
Rent.
rent, 16.67%. Ghana, 28.67. Full credit, because this is less than this. Then we had the interest,
Interest.
right? Was 3.75%. 28.67%. We still grant full credit, right? From here, I know you can all continue, right? The liability. Okay,
Yes.
foreign
So
tax.
now my question,
Yes, please, you can ask your question.
assuming now it is opposite, when we reach this level,
Let's just modify one of them, right? So that it will look okay.
yes,
So now assuming that let's say the investment income, okay? Assuming that the investment income resulted in average tax rate of, let's say, 30%, okay? Now we know average tax rate in Ghana was what?
28.37.
28 point what?
37.
67%, right? So that means
Yes.
since the average tax rate in what? In UK is greater than average tax rate in what? In Ghana. Are you getting it? We grant
Yes.
limited credit, right? Limited.
Okay.
And this limited credit, limited or ordinary credit, is giving us the average tax rate in Ghana by our gross foreign income. You get it? So that means you limit it. Remember, the income must not be more than, the tax must not be more than 28.67. So now I'll take the 28.67% and now multiply by the investment income. And how much was the investment income? The investment income was what? 40,000, right? So that means the foreign tax credit I'm going to get is now 28.67 by the 40,000. That means that this is a limited credit, right?
Okay. 11,468.
So we will claim 11,468 instead of the 12,000, right?
Okay.
Of course, you cannot claim 12,000 is more than the average tax rate in Ghana, right? So you can only claim this 11,468. So this is how we do limited credit. You just multiply the average tax rate by the foreign income, in case you get something like that. Very easy, right?
Yeah.
Any question? Any question?
Sorry.
This was.
Please, in the graduated tax rates,
Yes, boss.
will it be always provided in the question for us?
Yes, it will be.
Or you have to know?
At your level, it will be provided.
Okay. And the personal reliefs, in ascertaining the chargeable income, the personal reliefs and the benefits in kind, are you supposed to use the rates that relates to the year of assessment in the question?
Of course.
So assuming the question relates to 2019 or 2020 year of assessment, you have to remember the rates that was used there.
Oh, sometimes they provide it for you. For international tax, mostly provided for you. But if you are doing advanced tax practices or something, at least just know the basics. Most of the time, they will not give you benefits in kind. Hardly do they give. It will be straightforward, just like what we saw. Just that they will examine all of the international tax principles in the same question. And when we get to employment income, you understand. You see, the person used to work in the UK. He came to the Ghana, left to the UK again. Has a 183-day threshold been met? Are you getting it? Before he was given an accommodation, but he was on a farm and all that, like what we saw, right? So don't worry about that. So now that we have seen reliefs, right? The next thing I want to talk about is entitlement to treaty benefits, right? Entitlement to treaty benefits. Under what conditions do you enjoy the benefits under a DTA? Okay, first of all, we must understand what DTAs are before we can know the benefits somebody can enjoy